So this is weekly commentary 60. Now, from the previous week, we're working from the daily because the weekly candle was a little unclear. So from the daily chart, we had this order block and we had this rejection block. If I just move this to the right a bit so you can see the candle's wick. We wanted to see protraction early up. Now, we didn't want to see that this high, taken out. We wanted to see this rejection block stay intact, protraction, and then expansion. And we wanted to see this low and this sell side liquidity pool taken out, and we've achieved that. Now, if you look to the left here, without zooming out too much, you see that there's really, no sell side liquidity pools left, right? Now, if I remove these, now the date right now is the 16th of April, and tomorrow, which is going to be Monday, is going to be the 17th of April. So it's, like more than halfway through the month. This is when I elect to use the monthly candle, right? The monthly expansion. Now, we had a sweep on this previous monthly high, volume imbalance, right? And we moved down. Now, look at the size of this candle compared to the last three, right? One, two, three, right? Now, this candle is going to be relatively smaller, especially this one as well, because of the times of year that they're in. But look at this last two specifically, right? February and March. How much expansion is left on the plate for this monthly candle? If you just compare the sizes, just by eyeballing the size of the candle, how much room is there left for expansion? Now, given that there is, two trading weeks left for this candle's close, where is that candle's expansion likely to reside in, right? So you see how we're trading beneath this low. Now, yeah, we came up, but we still have loads of time in this candle's expansion. Have you ever seen a candle open, like a 5 minute candle? It trades down, and then it comes back, and then it just trades down a bit harder. That's what I'm expecting for this monthly candle. I'm favoring a bearish monthly expansion, right? We had that sweep on this candle's high, and I'm expecting this to become a bearish order block, right? Now, if we go to euro, right? If we go to the 3 month, I want you guys to annotate this. We have a fair value gap from this candle's low and this candle's high, and you see we haven't really tapped it yet, right? If we compare this candle's high, right, because this candle's high is basically the start of the fair value gap. This candle high comes in at 762, and this is 758. So we haven't really gone into it yet. It's very, very equal. You could even class this monthly's candles high and this monthly candles high of, 3 month candle highs, sorry, of being relatively equal highs. So you can mark that as a buy side liquidity pool and this one institutional order flow entry draw. I want to see this get traded into. Now, if you consider the calendar for next week, we have something on Monday, and then Tuesday we have pound. Wednesday we have pound again. I believe Thursday is unemployment claims. And on Friday we have a lot of folders. Now, this Friday is going to be tough. Now, many weekly commentaries ago, in one of the weekly commentaries, we spoke about having a whole day of red folders. Now look at the times of day, right? You see, if we just had loads of news events at 9:45 a.m., for example, let's say we had four. Well, that's one time of day. We don't have to consider each news event. We're just considering the time of day. All you're focusing mainly is this. This is the part of the calendar that you're focusing on. Now, we're always trying to understand, the economic calendar through the lens of a power of three. This is going to be manipulation or distribution, right? Now, when there's one folder, for example, like this unemployment claims, or if you go to Monday, we have just really we just have this one at 8:30 New York time. It's very easy to put this into our power of three narrative for the day. Given what price has done before, we know what this is likely to do, right? Now, what about when there's many? Which one is the manipulation? Which one's the distribution? Right? How many swings do you expect to occur on Euro USD and Pound USD on this day? It's very, unpredictable, and we don't like unpredictability. We like the market to tip to one side, right? Now, this, in hindsight, this could be a very clear day, but just looking at this day, you know, from where we are right now, this is a day that I would always avoid, only because of there is too many times within the day, sorry, to, you know, factor in manipulation. If you want to ever entertain a day like this, entertain the New York session. Let all of this pass, and perhaps the market will tip its hand to where this is likely to go. But you don't want to try and entertain the London and the New York in this specific day, right? So just consider that. Now, in saying that, we can see that there's going to be, an expansion between Thursday and Friday, given that we have unemployment claims and straight away we're going into a big, red folder week, day of being Friday, sorry. If we go back to the daily chart for the DXY, now for Friday, when we swept this monthly low of February, we came back in. Now we had this mitigation block, one, two, three, four up candles being one order block, and we have this fair value gap, right? Now we've traded into this fair value gap. Now I'm saying let Monday pass, right? Now don't let it doesn't mean let the entirety of Monday pass, but at least let the London session pass, right? Let's see if London can rally up quickly above the previous day's high of Friday and offer clear displacement lower, then you can possibly entertain short DXY trades going into New York open kill zone and London close kill zone. But preferably let Monday's candle form, just like how we let this one form, and then this move was very easy. Let's see if we get a green to red day. What does a green to red day mean? If we get Monday's open and we trade above this candle's height and we just wick away from it and we create, you know, a bearish candle, Tuesday's candle's likely to follow, and then Wednesday to follow towards this sell side liquidity pool, right? Now, I wanted to go over the swing trade parameters that I considered for when I took a swing trade that I showed you guys in the Telegram group chat. It was around here. I was targeting this rejection block here. Now, the parameters for it was this, right? When I swing trade, I consider higher time frame opens. Now, when you day trade, you should consider the daily open and work within that daily opens, that daily candles expansion. Now, when you're swing trading, you're more so working off of the weekly expansion and the monthly expansion. So what I like to do is this. Where is the likely monthly expansion likely to be? If I have a very clear monthly expansion for the candle, right? So for example, like this candle, I was favoring the run on this buy side liquidity pool. Why? This candle from chapter 6 lesson 1 swept this previous candle's low, expanded higher. This buy side liquidity pool still intact. I'm expecting this to be an open, low, high close with this buy side liquidity pool as my target. So going into this month of April, in the monthly chart, the daily candles in an expected bullish expansion of this candle should be, they should point higher. So any retracements going lower, you know, until this buy side liquidity pool has been hit, right? Given that this isn't hit, any retracement lower into a discount PD array, I would look to take a trade to go long and attack that buy side liquidity pool. That's the narrative behind the swing trade, the monthly expansion and this monthly buy side liquidity pool, right? Now, then dip down to the daily chart. We have this rejection block, right? And we had an order block. Now, when Monday trades down into it, I took a trade long and I'm targeting, well, I wanted to target this high, but we had this rejection block. So I'm targeting, you know, the opposing PD array. If there was, this was not a clear rejection block, I would have, of course, targeted the high, but I just wanted to be safe and just target the rejection block. Price trades down into it and moves away. If we keep like that, this. Now, I could have, been upset about, I could have stretched it and said, I really wanted this trade. That could have been, that would have helped me out a lot more. Understand being content. A lot of the times I get messages from you guys saying, oh, I think like a 3R is not enough or a 2R is not enough. Everything I have done in trading, everything has been off the backbone of 2-3R trades. Now, in saying that, I have gotten some big trophy trades where I've had double digit risk to rewards, and those come with consistency. Every single time you take a trade, right? Sometimes you're gonna get one that is just rapid in your direction, right? Looking back into it now, when I saw this candle, I should have perhaps trailed my stop loss and I should have removed the TP and I should have manually just seen it ride and see where I could have taken profit, right? That's something where if you've watched the podcast I did with Riz, that's something that I, say that I do. If I see that from my entry, if I get it and I get a big rally away from my entry, and I see, there's a lot of displacement that's close to my TP, I'm assuming that the market's going to run quite heavy past my TP, then, you could either look for a greater target that's, reasonable, not, for example, a reasonable target would have been, so I targeted this rejection block. Instead, I could have went for the buy side liquidity pool. I wouldn't have just stretched my take profit here, right? In, you have to do it within specific parameters. But that's something to consider, right? Now, there's also some of you that understand the power of 2-3R, and you showed me, your trades taken on your fundeds and your MT4, and you see that over many, many trades, that 2-3R, once you get a few going together, especially, they really do add up. So do consider that, right? So just to reiterate swing trading parameters, the crux is this. You guys should always be working within a specific candle's open and expansion. For example, the daily, if you're scalping, perhaps the 4 hour. If you're swing trading, you can fall back to the weekly using Sunday's opening price, or the monthly using the monthly opening price, which is usually the first day when that monthly candle opens, right? You're using these candles opens and you're using protraction and expansion given the open of that candle inside of the PDRA matrix. Now, what does that mean, right? For example, Sunday's opening price was here, right? What's beneath it? Discount PDRA. So we know that this is a likely low of the week for euro dollar because from this opening price, where can that protraction for the weekly candle go into? On the daily chart, we see there's a rejection block. And then the expansion can be entertained from underneath the opening price of the weekly candle inside of a PDRA. All you're doing is this. What I've taught you in chapter 3 for your day trading opening, midnight open, you're just electing to use it on a higher time frame candles open, and you're just shifting the time frames up one. So instead of waiting for you know entries on 15 and 5 minute PDRAs, I'd wait for 4 hour and daily PDRAs, right? That's it. There's nothing else really to it. Now, for the people that are considering swing trading, and I've had conversations with you, this becomes your best friend. This right here, right? Because this tells you when the weekly expansion is likely to unfold. So given that you know that it's going to be a Thursday, Friday news event, if you can see that there's a really nice chance for you to align yourself on the Tuesday and the Wednesday, possible Tuesday or Wednesday half of the week, and you know that the expansion is going to be on the Thursday and Friday, you know that I can try and align myself before those big moves come into the market, right? That's how you can entertain swing trading. Consider the economic calendar to carry your swing trading in terms of the weekly expansion and the monthly expansion and so forth. Just like day trading, we don't really consider so much the day of the week for the news event. We consider more the time of the day for that specific day that we're trading, right? I hope that makes sense. If we go to the S&P, um, so we expected, to trade above this high, right? Now, I still have a bullish tendency on the S&P 500. I still want to see these highs get traded through. You see that these bodies of these candles highs, right? How relatively equal they are. If we just see this without the wicks, right? Imagine this piece of price action without the wicks. This is like a triple top, right? I want to see that get traded through. So I'd have a bullish tendency on a US 500. If we go to a lot of people now trading, crypto, where is for Ethereum, I believe we did touch on it on a weekly commentary. This isn't a trade I took. This is something I helped someone to line out. Uh, institutional order for entry draw to take a trade for someone. That was someone that asked me the mentorship for my opinion on Ethereum. If we go to the weekly, I'm targeting, the high of this candle, which is basically essentially it's open 2150, to get into this fair value gap, and then I'd just, wait to see where it wants to go from there. That's what my opinion is on Ethereum. If you look at Bitcoin, on the monthly. We're getting closer to that monthly fair value gap as well. Now, saying that I'm expecting a bearish monthly expansion for the DXY, right? I'm expecting this candle to trade down lower to around here. That can set up, the move for crypto to, have a bit of room to move higher, right? So that's going to be it for this weekly commentary. Like always, if you need any help, of course, ask me. One thing I want to just reinforce into you guys, especially if you're new in the mentorship and you're watching this, the homeworks are never outdated. In chapter two, if you cannot get chapter two, done to a good level, and you can't really identify those PD arrays, the mitigation, the breaker, the fair value gaps, the order blocks, the rejection blocks, you will struggle because that is essentially going to be your draws on liquidity and where you're going to frame your trade setups. Now, it's very easy to watch a video and you find it hard to say, I'll come back to it. The reason I'm here and the reason this isn't a course and this is a mentorship is because you guys have access to me all the time and all of you have the same accessibility to me as each other. It's not like I reply to one of you and I don't reply to the other. Nail your chapter two, it will make your life a lot easier, right? Because we're going to use them for, elements of a trade setup in chapter four being a high time frame PD array. Now, if you can't identify a mitigation block and a breaker block, and you're identifying the wrong thing, you're going to struggle because you're going to be looking for trade setups at high time frame areas that aren't correct, right? Chapter three, lesson two and lesson three, those weekly profiling and daily profiling homeworks, I expect them done as well. The market maker identification homework in chapter four, lesson three, that as well, right? So consider that. So until next time, and I'll catch you guys in the next one.